Hello and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we're very pleased you have joined us for our three-day Precious Metals and Critical Minerals Conference. The next presentation of the day is from Prince Silver. Please note, you may submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for a one-on-one meeting by clicking Book a Meeting. At this point, I'm very pleased to welcome Derek Iwanaka, Chief Executive Officer and Director of Prince Silver, which trades on the OTCQB venture market under the symbol PRNCF and on the CSE under the symbol PRNC. Welcome back, Derek.
Greg, thank you so much. And well done on getting my name pronounced correctly, because I know it's a bit of a mouthful sometimes. So hello to everybody out there. My name is Derek Iwanaka, as Greg mentioned, and I'm actually a very new CEO. I just started about 2.5 months ago, and this is really one of the first times I'll be presenting the story, so bear with me here. I came from a larger company called, well, it was a larger group called B2Gold, and some of you may be familiar with the large gold producer. And I was with a company called B Metals, so it was a subsidiary of B2Gold. And obviously, having that kind of safety blanket with the B2Gold group was terrific. But about 3 months ago, I was asked to join the Prince team. And for me, there were a number of reasons why I came on board, but I'll just go through a few of those reasons today. And I'd be happy to answer any questions. I have a long list of reasons why I joined the company, but I'll just go through some of them as highlights. I will be making some forward-looking statements, so feel free to read our disclaimer language here on our website. And I'll get right into it. I mean, the main reasons why I joined the company, number one has to be that we're in a proven district. So some of you may know that Nevada was known or is still known as the Silver State. And in this case, we have a project that is not early stage. It is actually quite advanced, and it has a number of holes that were drilled on it. In addition to it, it was a past producing mine. So this is more of a brownfields type of project. And I love that it has a whole bunch of historical data, and I'll get into some of that very shortly. Number two was it was fully funded when I came on board, and I'm sure most of you know that it was a tough slog for the last few years in mining, and now all of a sudden it's come to the forefront at last. And thankfully the company was fully funded, and we actually just closed on another financing today just to top up to ensure that we have sufficient funds to do a second drill program. So at the moment, we are currently drilling 9,000 meters. That's an RC drill program, and we have 2 rigs turning in Nevada at the moment. What does that mean? It means that we're going to have a steady flow of news to come. Plenty of news in terms of drilling results. We put out our first set of results about a few weeks ago, and we should have our next set of results, I believe, probably the next week of February. So that'd be mid-February, we'll have those results out by. As I said, we do have quite an advanced project. And in this case, the previous operators of our project was a private Australian company, and they were able to put together what's called a JORC-compliant exploration target. That target was looking at or contemplating between 23 to 45 million tons of ore. What does that mean in terms of ounces in the ground? It would indicate that there is somewhere in the range of 75 to approximately 150 million ounces of silver equivalent. So that is what we are working towards right now, and we're aiming to have our first resource estimate out by the 3rd to 4th quarter of this year. So that is something that you really want to stay tuned for, because as you might know, when you go from exploration to an actual resource, all of a sudden you have something to hang your hat on, and that usually gets a re-rating in the market. And lastly, I'll just say that we do have very disciplined capital structure. and a very strong balance sheet. As of today, we now have a little over $8 million in cash, so we're quite cashed up. And we still have a very low share count, which gives you really extra torque when the shares actually start to rise. Of course, that can go conversely, but in our case, typically right now, at least, we're in a really strong market for precious metals, and it's been a good market for us in general. So where are we? We are in Lincoln County, and Andrea was just mentioning that she lives in Reno, or was in Reno, and in this case, we're in the far eastern side of the state. It's about 2.5-hour drive from Las Vegas. And I love this area because it is a very well-known historical area for silver and for zinc. Between 1912 and 1964, this is called the Pioche Mining District. Just looking at recent metal prices, I know it changes every day quite dramatically recently, but suffice to say that this region, and just on this map alone on the right, it's produced about $5 billion worth of metals. And that would be in the form of silver, gold, manganese, lead, and zinc. So if you were putting those together, it's produced a lot of metal. And our particular project is what's called a CRD, or a carbonate replacement deposit. For those of you who are not geologists, basically that means that these types of deposits are usually known for their size, their continuity, and metal diversity. And we are seeing all those attributes here at our Prince project. And what is a real, I think, unique aspect about our project is it has silver, zinc, lead, manganese, and gold. And as some of you may know, this means that those, at least 4 of those metals are actually part of the critical minerals list. And we are just starting to get into applications for potentially getting either government funding or fast tracking for permitting. As you probably know, the Trump administration is very much pro domestic critical mineral production and supply chains. And that's something that we could produce right in the backyard of Nevada. So this photo here on the left, and it might be a little bit tough to see because it is a black and white photo, but essentially that is what it would look like if you were mining in the early 1900s. So you can see there's guys with pick and axes and hammers. It was pretty primitive type of operations back then. Suffice to say that the Prince mine alone produced about 1.1 million tons of ore, and that was averaging around 100 grams per ton over that 37-year history. And they were mining generally high-grade veins and mantos. Mantos would be kind of flat surface, flat deposits. And this, just a small mine, produced about 3.6 million ounces of silver and about 50,000 kilotons of zinc, as well as a little bit of gold, 18,000 kilo ounces of gold. Manganese was present, but at that point, it really wasn't a focus. And so there was a little bit of production of manganese, but it wasn't a big focus. And today, manganese being an important critical mineral, it is definitely in focus for us today. Now, if you look at just kind of historical production from that small mine, at recent prices, you're looking at producing about $600 million worth of metal just from that small mine, 3.5 million ounces of silver. So keep that number in mind. In particular, at this project, there were really broad zones of lower grade material that was left untouched. And as you can see from the photo, when you're dealing with that type of method for mining, you're not going to be chasing a lot of lower grade material. It just wouldn't be economic at those prices. I believe when the mine shut down, it was probably around $3 an ounce silver, and today we're sitting at close to $80 an ounce silver. So with modern methods of mining, I think that this whole project really deserves a reevaluation, and that's what we're looking at right now. So this is a aerial photo of the surface here at Prince. And you can see here we have the historic mine head frame here I'm not sure if you can see my cursor, but right towards the top middle would be the head frame. And what you have here, just below that, are two collapses. So what was happening is you had a past mine drift that was going kind of towards the top right-hand corner of the screen. That collapsed in the last 75 years since the mine stopped operation. And what that has given us is a real glimpse into what it looks like underground. So this is a photo from just outside of that one of those holes. And you can see quite distinctly, and I'm not a geologist, but you can see that there's a white material right from the surface down to about 3 meters or so. And then there's a darker material underneath that. That would be your carbonate replacement or replacement ore. So what happened is the hot fluids would have come up from underground and replaced the limestone. That would be the white material. And that effectively, that dark material is your pay zone. That's the type of stuff that we would like to be mining. And this mine was historically producing down to about 254 meters or 835 feet. So what does that tell you? It basically means that there's a lot of continuity from the surface right down to depth of 254 meters. What was really untapped at that point was if you go below that 250 meters, you start to get into what's called lower sulfides. And that tends to have higher grade gold component. And that's something that we're really tapping into right now with our exploration program. So what it was called was a PO shale. As I said, it was kind of a lower grade mineralization that was very untested. Up until 2012, basically nobody had even really tried testing it. And now we are doing a 9,000 meter drill program. A lot of that is going to be going right through that deeper PO shale, and I'll get into some of those results. So what helps me kind of get to sleep at night is that we have 27 years of historical production under our belt at the project. And in addition to that, we have nearly 130 historical drill holes. So we have the data for those drill holes. And that gives us a big jump, or I guess we can skip some of the drilling in order to get to a mineral resource estimate later this year. So effectively, we have about 17 kilometers of historical data. And on top of that, we're drilling nearly 18 kilometers of additional drilling this year. At least that's what's planned for this year. So that should give us a nice size resource estimate for later this year. So when I got started, we were just drilling, and I have to say I'm quite pleased with the first set of drilling results that just came out towards the end of last month. January 13th. And I'll just kind of go through a couple of the higher grade intersections. The first one being about 1,300 grams per ton silver with 14% manganese, also had 2% lead and nearly 4.5% zinc. That's over 3 meters. The second hole, that was a little deeper, 273 to 276 meters, but that hit a nice intersection of gold, and it had 4.78 grams per ton gold with 355 grams per ton silver. The intersections below that are thicker, albeit a little bit lower grade, but suffice to say that we are hitting into those PO shales, and it appears that we are hitting the type of mineralization that we are looking for. And if you look on the map on the right-hand side here, you can see in this kind of purple or pink ellipsoid, that basically is the exploration target area. And you can see where the blue holes would represent what we've drilled this year. The red holes would be some of the historical drill holes that were done in the past. And all this will be put together towards putting a resource estimate to complete later this year. And because those drill results went so well, we ended up acquiring a whole new set of claims. And our existing claims would be this orange and blue property down to the southeast, and then up towards the western side, you see a bunch of green claims. Those green claims are what we just picked up about a week ago. Now, why did we pick up those claims? The main reason would be that you see a blue line coming down the map. That blue line represents the Great Western Fault. The Great Western Fault would be a large fissure or crack in the Earth's crust. And you would have seen a lot of those hot fluids millions of years ago come up to the surface, and they would bring up those metals of silver, gold, manganese, etc. So we are trying to be as close to possible to that Great Western Fault, as that is interpreted to basically control or bring up those metals. And so we've acquired some of that ground. We are trying to acquire some more ground, but we'll get into that a little later. So what do we have to look forward to here at Prince? As I said, we do have 2 drill rigs turning at the moment. What does that mean? It means that we're going to have more and faster drill results. And if you look back at our first batch of drilling results back in January, you would have saw that the stock did get a good lift after those results. So I can't promise we're going to continue to do as well as that, but there will be more drilling results. I can promise that. We will have at least 25 more holes coming out of this first phase of drilling. And as of today, we just closed on a 4.5 Canadian dollars financing, which means we are fully financed to complete a second phase of drilling, which basically would just go or overlap the first phase of drilling. So more drilling results to come. And all that is now going to be fed into this mineral resource estimate that could be done as early as the 3rd quarter of this calendar year. But I would think probably closer to the 4th quarter of the year, we can look forward to that. One question is metallurgy. And we did start working on the metallurgical studies as of late last year. As some of you may know, manganese and silver can sometimes be challenging when they're together. And so we started on this metallurgical study late last year. We're using the same laboratory as Aftermath Silver. Aftermath Silver is, I think, a 300 to 400 million market cap company that has a high component of silver and manganese in their deposit down in Peru. We're using the same lab, and hopefully we can come up with results that are going to be very similar to what Aftermath Silver has. I believe their recoveries are around 95%. So that's something that we would strive for as well here at Prince. So one way of evaluating companies is to look at us from an enterprise value per ounce basis. This is sometimes considered a bit of a crude method, but at least it gives you a pretty good idea of what companies are being valued at today. So if you just basically look at from the left to the right, you start off with a company called Vista Silver. These are all companies that are pre-production. They're not in production right now, but they have silver resource bases. So you have Vista Silver, they're sitting at about 2.3 billion market cap. Then you have Dolly Varden Silver, close to 600 million. These are all in Canadian dollars, by the way. If you total them all up, you're looking at about an average of $2.53 per ounce. In our case, we have that historical exploration target, which is 25 to 43 million tons. If you were to do the math and you looked at, that means between 75 to 150 million ounces of silver equivalent. You multiply it by that number, that would give you a rough estimate as to what we would potentially be valued at with a resource estimate. So in our case, let's just say for round numbers, you looked at 100 million ounce deposit at Prince, and you multiplied it by 253. That would give you a rough market cap of $253 million. And today, I think we're sitting at about $42 million market cap. We do have one other property. It's about 14 kilometers just to the northwest of our Prince property. It's a large copper moly porphyry target. It deserves a lot more work. We have not really focused on it as, you know, right now we're really focused on the Prince project, but I think that we will take some time to do some exploration work on it. later on this year. It would be, I guess you could say, relatively similar to KGHM's Robinson mine, which is about 150 kilometers to the north of us. That is also a copper, gold, silver, moly mine in operation today. It is a large-scale project, and it's, I guess, maybe the most similar analogy to our Stampede Gap project from what we can see. But again, it will deserve some more work later this year. And then just getting into the structure, we just closed on the financing today for $4.5 million. So this is a pro forma that I put this slide together a few days ago. But basically, we now have 58.9 million shares outstanding. We do have some options and warrants outstanding as well. And then we have what's called contingent rights. And some of you might not be familiar with this. What happened was when we acquired the projects in Nevada, we paid the shareholders of that company 15 million shares of Prince. On top of that, we have given them 8.5 million contingent value rights. The way that works is if we are able to come up with a resource estimate with 100 million ounces of silver, those get triggered. And if we can complete that actually by July 11th of this year, that actually gets reduced by 20%. So potentially, if we can get a resource estimate completed by July 11th, that means we would only issue out 6.8 million shares instead of 8.5 million shares. So currently we have about $8 million in the bank, zero debt, market cap sitting around 43 million, and I see that we're going up again today. We do have, as I said, some warrants outstanding, and there's a little breakdown below. Founders, insiders, we own about 20%, 26% of the shares outstanding. There are several newsletter writers that do cover us, and I don't know if any of you follow them, but we have Brian London's Gold newsletter. We also have Jeff Clark's Pay Dirt Prospectors, Chen Lin, and Peter Spina with Silver Seek, sorry. All cover us, and they're all significant shareholders of our company. And then we do have a couple of funds that are institutions that are in our share registry as well. And then the rest is all retail. So we do see a fair bit of trading, especially lately, particularly on for us, the TSXV, or sorry, the CSE right now. But I am seeing quite a bit more volume on the OTC lately, which has been really refreshing to see. Management, everybody says they have the best management team. I think we truly have, we're really blessed with some really terrific people. Ralph Shearing is our president, and also the CEO of a company called Gold Group Mining, which is growing into an intermediate gold producer in Mexico. Myself, I've been in the industry for over 20 years. A good chunk of that, almost half of my career actually, was with the B2 Gold and BMO previously group. And I've been with several companies, have taken projects from exploration right into production, and have raised significant amount of capital for advancing those projects. We have a number of technical guys on the team as well. I'll also point out that we have Daryl Rader, who is the CEO of Minorum, who is an independent director. A lot of experience on the team, and I'd be happy to get into any more details if people have questions on our team. Lastly, I'll just close out by saying we are in one of the best jurisdictions in the world. We are in the silver state of Nevada. I like that we're really leveraged to critical minerals. So in our case, we have silver, zinc, lead, and manganese. We also have a gold component. So those metals are either considered strategic or critical in the United States. And again, that could lead to either potentially U.S. government funding, as well as fast tracking the permitting there. And I really think that we do have the potential to have a district play here, because the area of Pioche was littered with all kinds of smaller mines. Potentially they would have all left some of the lower grade material, which at today's prices are going to be very economic. And lastly, I'll just say that we have a lot to look forward to. We have 2 drill rigs turning right now. We'll have a lot of drill results to look forward to, including a mineral resource estimate later this year, which would all basically lead into a potential re-rating in the stock. Lastly, I'll just say you can reach me. I will be available for questions after this, but you can reach me also at info@princesilvercorp.com, as well as just going to our website, princesilvercorp.com. And with that, I can open it to questions. And okay. First question I have here is, if things go as well as you hope in 2026, what would you like long-only institutional investors to be saying about Prince Silver a year from now? Well, okay, thanks for the question. If all things go well, we would continue to have strong drilling results like we had the first batch. Ideally, I'd like to see a very large resource estimate come out with hopefully very good grades later this year. And any institution that got in right now, I would say, is a terrific time because for us, I'd say the train quite hasn't left the station yet. You've probably noticed a lot of the larger, more advanced companies have already had huge lifts in their stock, quadrupling or quintupling, or some of them would be up 10 times. In our case, I think we're still a little bit lower down on the curve. And so I think that when we get that resource estimate out, we're going to see a very significant re-rating. And I think that means that any institution that gets in today is going to be very pleased with the results of that. Hopefully that answers that question. Next question I see is, you've assembled a board and technical team with multiple past discoveries and re-ratings. What playbook from those prior successes are you deliberately applying at Prince to accelerate value creation? So thanks for that question. And as you pointed out, we have. I have in particular. I was involved with a company called Your Honor's Energy Corp. We actually were able to permit. Well, first of all, we discovered, we permitted and constructed and put into production a ISR uranium mine in Wyoming. And that gave me a really good glimpse into every single stage of what it takes to take a project from exploration into production. In that case, we actually were able to get state money as well to help with the funding. And so what I can say is that, I think we can take some lessons out of that experience in terms of what can you expect coming forward especially from a permitting aspect, but also funding. Funding is just so critical. And every step you could be bottlenecked if you don't have the proper funding and you're not looking ahead at things that are coming up so long or large lead items. You really have to get in front of that. Also, just like small things in terms of production, construction. You have to get the groundwork done, and all that is really important. And then if you don't have that experience, I think that it will definitely be a step behind. And so I think we have an advantage there. And for sure, Ralph has even more experience taking projects from exploration to production. So yeah, I think we're in really good shape from that standpoint. Next question says, you highlight Nevada as a tier 1 jurisdiction and U.S. exposure to 5 critical minerals. What does the blue sky case look like if Prince ultimately advances from explorer to a multi-decade U.S. dominant operation? The potential would be absolutely massive. I mean, as I pointed out on that slide with evaluations, just when you get from an exploration company to the resource stage company, you're going to get a huge bump up, assuming that you have the goods. But on top of that, if you actually were to get into production, especially at today's metal prices with silver at $70, $80 an ounce US, there would be, you'd be getting into some very serious market capitalization. So the blue sky, I have to say, is basically limitless at this point. And yes, that would be a forward-looking statement. I think we only got one more minute, so I'll just take one more question here. It says, How is permitting in Nevada, and do you have water? Yeah, in this case, permitting is about as straightforward as you can get. Just for exploration permitting right now, we're mostly on patented and unpatented ground. You're looking at between 1 to 3 months for permitting for exploration. And then for permitting into production stage, you're looking at 1 to 3 years, effectively 3 years typically. But in our case, because we have these critical minerals, you could potentially be fast-tracked, and that means it could be more like 1 to 3 years of permitting to get into a construction phase. For us, job number 1 is to get a resource estimate done, and then this year, and then job number 2 would be to get a economic study completed. So that could be either a preliminary economic assessment, a pre-feasibility, or a feasibility study in the next year after that. So that's all stuff to look forward to. And I don't know if we have more time or not. I'm happy to keep on going through some of these questions. It looks like we have a lot. Next one here. Is there a workforce available nearby? Is the biggest city, what's the biggest city in Lincoln County? So there are 2 towns that are actually quite close to us. The one is Pioche, which is about 4 miles away from us. And then Caliente is, I think it's only about a 15-20 minute drive from our project. So that is also close by. Both of those towns roughly seem to have a population of about 2,000 people each. So potentially you would have the workforce that can basically drive right from their homes right up to the property very easily. So easy access, I think, to a workforce. And then, of course, you have Las Vegas. That's just 2.5 hours to the south of us. So obviously, you could draw people from there as well. Where was a question of, do you have water? Yes, we have water. We have access to water, both from underground, but also we usually truck in the water. And that's mostly just for the drilling right now. Another question, your board and advisors have discovery and development credentials, Great Bear, Minorum, Luca, etc. How are you leveraging that experience, specifically in Prince, in terms of targeting and capital allocation? So yes, I mean, having all that experience basically has made things easier from my perspective anyways for raising capital. So like we just did the $4.75 million raise, and we basically had it filled within 24 hours of announcing that. So a lot of that is predicated on the experience and the history of our team. Certainly, we wouldn't be able to raise that type of money if we were just off the street and nobody knew who we were. So that certainly goes a long ways for helping to raise capital. Another question here. As you deliver more results through mid-2026, what type of investor do you most want to attract in the story? Specialist mining funds, U.S. critical minerals investors, or generalists looking for silver leverage? The answer would definitely be all the above. We'd be happy to have really any investors, but I guess what would be very interesting to see would be if we could get the government to back us in terms of funding or with fast tracking permitting. That would do wonders for the stock for sure. I've seen this done numerous times now. One was called Talon Metals, another was called Trilogy Metals, Ucore. You can look those companies up. Once they got government funding, their stocks were, they had tremendous runs shortly after that. So if we were to secure that type of funding, even if it's not nominally a huge amount, it really would do wonders for the stock performance. So yeah, we'd be happy to have any of those investors. Another question here. How are you balancing infill drilling needed for an MRE versus step out for growth? And what is the decision rule for moving from phase 1 to phase 2? So I'll just answer the first part of that question. Most of it is going to be infill drilling at the moment. So effectively what we're doing with this phase one is just proving up the historical drill hole database, and as well as just really verifying the historical drilling. So that's job one for this first phase. Now that we have the funding in place, we can launch into phase two, and we do have permitting room for that. So phase two, I would say will probably, well, I guess it depends on if the rest of the drilling currently goes well, and there's no need to do additional infill drilling, then we would probably do some more step out drilling. So we haven't done that in this phase of drilling. We just want to prove up what we think we have. Phase two would be more step out type drilling. We probably would still do some infill drilling, but phase two would probably be the more exciting phase of drilling. How important could the manganese and base metal credits be in potentially driving down future cash costs and positioning Prince as a lower cost producer in a rising silver price environment? So yes, the manganese is going to be, I think, potentially a really huge component. And you know, our first batch of results, we got holes as high as I think 15 or 16% manganese. So that's very high on the manganese side. What does that mean is it could basically be used as a credit. So any silver production you have, you could use the sale of manganese to offset some of those costs. So we're not at a economic study at this point, but it's very intuitive that you can expect that you would have a lower cost silver producer if we use those other metals as credits. And you know, and it's not just manganese. We also have zinc and lead, and as well as copper and gold. So all those could be used in this case as credits. A few more questions. How Prince took over the project from the Australians? Did it go okay, or did they buy the project? So the projects, well, the Prince project was an option, and we acquired that option. So that was, the project was acquired in July of last year. So this July 2025. So as I stated, I think earlier on one of the slides, we effectively paid them 15 million shares, and then we paid them, or we will be paying them additional contingent value rights. Those contingent value rights really depend on whether we are able to get that 100 million ounce silver equivalent resource completed in the next 3 years, or if we get it done by July, then we significantly decrease the capital, or sorry, the dilution on those value rights being distributed. And last question, it says, first resource estimate, what do you think it could look like? You know, I think that resource target or exploration target that the Australian company did between 75 to 150 million ounces looks pretty, I think, reasonable at this point, given the drilling that we've seen so far. But, you know, that could all change with the next 5 or 10 drill holes that come through. So, but I would say that, you know, based on what we've seen so far, that looks like a pretty reasonable estimate. Some of our geologists think it's going to be a lot larger than that, but, you know, we'll have to wait until we see those results. I think that's about the last question I have, unless anybody else has any additional questions. Okay. Andrea or Greg, unless there's anything else, I think we're more or less done. Again, if you have any questions, please feel free to reach out to me. You can reach me at info@princesilvercorp.com, or just check out our website, princesilvercorp.com. Thanks all, and hopefully I'll hear from you soon. Bye-bye.